What's up guys, welcome back to my channel. My name is Alan again, help you gain. Guys, breaking news, CPI finally came out. It went up to 9.1% and hit a new 40-year record high. And just like we said in the previous two videos, we had to catch the signals and find the perfect timing before trading. What we can see is that after CPI came out, the Bitcoin fell rapidly in 15 minutes. And just as we mentioned before, there was a very important support. So, although the red candle looks very powerful with high selling volume, but it was eventually topped back by the bulls, which is a very good bullish signal in the short term. So, guess what? I opened a long position in 19,580 and the ROI has reached about, guess what? 200%. It looks so delicious, right? So, is there any chance to go long again? Do watch this video to the end. I will give you all we have about the targets and the trading plans. So, let's get started. Let's take a look at the Bitcoin step by step, starting with the daily line. We also see a very good bullish signal. This is a bullish engulfing structure around the support level. I think this is an effective bullish engulfing structure. Here are the rules to tell whether the bullish engulfing structure is confirmed. Number 1, the market volatiles, and it indicates that there are big whales coming in and the retail investors cannot affect this. Number 2, there are bottoms and supports in the past few days. Number 3, a high trading volume is confirmed. Only those 3 points are met, then the bullish engulfing structure is confirmed to close a short and open a long position, and there will be a second rebound to around 21,600 or even higher. However, you must know that we are still in a downtrend. If I plan to hold a long position for 2 to 4 days, I will consider closing the position near the resistance level. In terms of the long position, you have to make it in the short term, because just as we said, the CPI was just released and is still bearish. And if on July 23rd the Fed decided to increase the interest rate, and it's likely to cause the market to fall again. So small positions and small leverage are necessary for long positions. Then we look at the most important for our chart. We can see that the price quickly fell to the support of the daily level and started a fast rebound. I know that there will be retail investors going in for short at this time, but at this time, you need to set up a stop loss line and don't expand your losses and don't go short on key support levels. And you subscribed my channel yesterday and you will not lose any money at this level, trust me. And next, let's see how to choose the perfect timing according to the current resistance level. As we can see from the Fibonacci, from the higher point to the lower point, we can see that the potential resistance area is around 0.618 to 66, which is close to 21k US dollars. This is the first position that we consider to set the stop loss target. And the second question is, why does it not continue to rise now? Because as we can see, the current price has come to an area where the tradings pile up. The point of control has formed a resistance level. The current short-term level should not be the timing when you go for long. You had better to wait for a failing callback before enter the market. Now let's shift to the 1 hour chart. This is what we have talked about in the previous two videos, like the second half breakout pattern. And now that we reached the point of control resistance level, and we need to wait for a pullback and then enter the market to go long. The position we need to pay attention to is around 19,400 because the stop loss is reasonable with $600 in buffer. And then we can expect the target to 21,500. Okay, this is what I believe for long now. Back to the 4 hours, as we said yesterday, we need to see it break the downtrend line before we can consider going long. and we are changing our strategy now, which is more like a rising flag pattern because they all show bearish right now. It means that the price is still likely to be stopped and continue to fall when it reaches the upper high in the future, and finally it may break out the pattern. Therefore, those who want to sell short orders have a rest and wait for a while, and it's a good time when the prices reach the top and see a bearish signal, and then you can go for short. So be patient. And let's take a look at Ethereum. We also need to change our strategy as well. I intend to believe that the Ethereum keeps hovering because it declines to the bottom edge and then rebound. The long-term strategy is the same as Bitcoin. We just need to wait for the price to retrace, open a long, and set up a stop loss. Finally, we need to pay attention to the resistance level of the piling up trading area, the daily and weekly resistance level. In the end, Standard & Poor's Index is consistent with the prediction of our first video. It fell to the support level and rebound. However, the short-term level is going up and down, and there is no clear direction right now. When the section is not broken out, I will be conservative and expect it to be bearish. Although the market has swallowed the bear news, it will take definitely a longer time to reverse the current downtrend, and the effects of inflation and interest rate hikes on the economy also needs the market a longer time to recover. So I think in the future, even if Bitcoin and Standard & Poor's Index are to end the decline, they will need to go through a very painful shocks, and I think the current decline is not over yet. So, the above is my trading plan and current market analysis. My opinions are for all references only and not for investment advice. Crypto trading is very high risk. Please be careful. Okay, I'm Alan. This is a channel dedicated to researching crypto trading. If you like my video and think it's helpful, please give us a like and share. And after 1,000 subs, I will bring you a live analyst. So please subscribe and you don't miss out any follow-up content. Alan again, help your game. I will see you in the next video.